What's up, guys? It's January 12th, 2024. We do a breakdown of the Emini. Pretty good day. Yesterday was a range day. Bears made money and Bulls made money. If you sold in the morning and bought in the afternoon, you would make some points. Today was kind of similar, but not as strong for the Bulls. Yesterday, we ended the day in a bull run, and today we can see the first couple of bars have continuation. We have a bull bar opening gap. Then bars 1, 2 are continuation, but 3, 4, 5, and 6 fail at yesterday's high. This is a good place to look for reversals. So we have a big up and big down for 6 bars a day. This is telling me that we could range for the rest of the day, and that's pretty much what we did. As soon as the 6 bars were over, the range high was put in and the range low was put in within the first 18 bars. So, pretty crazy day. Pretty annoying day for sure. I got stopped out on this huge bar. I had to stop around a couple points higher, so that sucks. But so bars 1 through 6 is big up, big down. 7 is breaking out of the EMA, and bar 8 is a pullback. Bar 9 we can see the start of leg 2 from bars 4 to 7. The leg 2 starts from bars 9 to 16, and I see that like this. Leg down, pullback, and there you have it, leg 1, leg 2. Something interesting about this leg 1, leg 2 move. The leg 1, leg 2 move was complete from a points price action perspective. However, within the second leg, we actually got the third leg. So it was a leg 1, leg 2, and then bars 13 to 16 were leg 3. And this gave the market a wedge bottom. We could say here's a wedge bottom. And the market went to range bound after that. We could see a strong leg up. The Bulls were already making money with really strong pullbacks from here to here. It's about 10, 15 points. 12 points. So the Bulls made money. The first pullback was a 12-point pullback, which is really deep for a bear trend. The second pullback was about 10. And you can see the bear gaps are shrinking the deeper we get into the trend. Here's a strong bear gap. You guys see this one? I'll make it red just to make it easier. And then here's the next bear gap, a little bit smaller. And look at this bear gap. There is no bear gap. All gaps are closing once we fell into the range. The EMAs are starting to go parallel with each other. Oh, I changed the color. This is still the same EMA. It's the hourly EMA on the 5-minute time frame. 20. Both are 20. This is the 5-minute 20 EMA. This is the 1 hour EMA 20 EMA on the 5-minute chart. Lines are starting to go parallel to each other, so the market can go range bound. Bears have been making money, Bulls have been making money. First 6 bars of the day was a big up, big down move, so we should be thinking range bound anyways. This became a good buy zone. When I see a range, I like to break it up into thirds. So I'll go like this. I'm gonna turn off the numbers for a bit. It's getting a little hectic. I'm gonna turn off the bigger EMA. That was a small EMA. And then I go range bound fibs. Okay. I'm gonna delete this top. So can you guys kind of see these lines right here? Sell the high, buy the low. But there's an extra line in here for some reason. Did I do the right fibs? That's half. Yeah, this works as well. You could buy at the bottom third, and you sell at the top third. I had an okay. I see what was going on here. Let me fix this. Go like this. Turn this one off. Okay, there we go. Now there. So yeah, you buy the bottom third, do nothing in the middle third, and you sell the top third. So if we bought here, sold out in the middle, good. Bought here, sold out in the middle. Bought the breakout, sold out before we get to resistance, because this is resistance within a range. Buy zone, sell zone, do nothing zone, take profits pretty much. So we would trade here to this line. We trade this line to this line to the middle. That's the 50% of the day. So there's lots of ways to trade this. On a real range day, the open would be a magnet, but the selling was so strong, and it came from yesterday's high and last week's high, that I think there's just too much resistance up here. Bulls are having a really hard time making it up here. Market was range bound. I'm going to turn back the numbers now that you guys can see the day into thirds. bar 32. So bar 18, the high and low is put in, pushed up into the EMA, and we have a sell vacuum on bar 26. We're testing lows, and we can see how much bullish price action is here. These bars are printing bearish, but there's a lot of bullish. There's also bearish price action. However, they're not making new lows. There's a small bull gap here. You can see bulls start to make gaps. So there was hints that this was gonna happen. Don't know for how far. When we're doing a reversal trade, our first PT would be here. So bulls get long here. They want to break this, then they want to break this, then they want to break this. The way I do it is pretty much just step ladder. And look at bar 58. They could not get above this, so that became a sell zone, which also lines up with the idea of the upper third being a sell zone, and we sell back to the lower third. Bar 58 is strong enough for a leg 2 move. It was a bear surprise. Huge bear bar. They race down. The first leg is here, pull back, second leg, third leg, and then we have a small bear channel that eventually has a bullish breakout. Very weak bear channel, lots of wicks, more bear bars, but lots of wicks. And the bears do not make a new low, so we have a higher low, double bottom, higher low with bars 42 and 71. The low of 41 and the low of 71 create a double bottom, and we see a small push up after that. Market goes into they have a small push up at 2 legs here, leg 1, leg 2, pull back, leg 1, leg 2, leg 3. It's really hard to count legs in trading ranges because here we can see a wedge bottom. I was looking for more wedge bottoms in a trading range. Here's a wedge bottom, goodbye. Here's a wedge bottom, goodbye. Wedge top. This is very parabolic, but you can see a wedge top from here. What I mean by parabolic, it was just steady buying. It does not look parabolic, but on a different time frame, these are just slowly going up in a range. So we're at the sell zone. We have a reversal doji under resistance. It's good to get out. Leg 1, leg 2, and a bear channel. Bar 72 is another wedge here, here. Buy for 2 legs and get out. Pretty boring day. I was not too happy. I thought we would get a good breakout after this was a triangle, and this is kind of what I was playing for today. I mismanaged my trade though, which kind of sucks to that huge bear surprise. This was the pattern I was looking at. So we have 1, 2, 3, 4. So 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. That's a triangle. That's a breakout pattern, and we can see we broke out here. 50% of the time these breakouts would fail and return back to the apex, and that's what happened. The breakout failed. The triangle breakout here, and then we draw a line. See? So we were making a triangle, a bear flag triangle with a bullish breakout. The reason I was more bullish was because we were above the higher time frame EMA. So I had a bull bias because we were above the hourly EMA. And then I saw this triangle and saw this breakout and got long, thinking we'd test the highs. I got snapped out right here, my position. And then the breakout fails, and we go right back to the apex of the triangle with a bounce. So there are different ways to play this to make it a little bit easier to trade. Bulls are not getting continuation on the daily chart, so that is not good. I might switch these hourly daily just to. I should talk about the hourly first, but we always talk about the daily. Oh well. Bulls are not getting continuation on the daily. A while back I was talking about this type of pattern that the bulls might need another push up to create a wedge top before we sell. We can see wicks at last week's high, which is the last sell zone, so the market's hinting that there are more sellers at last week's high than buyers. Today bulls would want a strong close and a new high. They failed 2 days in a row to get a strong close above last week's high, so that is not good. When I mentioned this first pullback, I said the PT was the recent high, and you can see they barely got it twice. 2 times in a row they tried and failed, creating strong selling at last week's high. We can see that further here. Sell zone, selling at last week's high, failed to go to last week's. The pullback failed to go to last week's previous high, and now we have a wedge top. Deep pullback, weak wedge, lots of wicks, and selling. The market's oscillating around the EMA. Leg 1, leg 2, leg 3. After 3 legs, it's good to start looking for fades in legs 3, 4, and 5. So it'll be interesting to see what happens next week. Maybe we get some sort of failed breakout and push down, or a gap down into the 50% EMA. I hope you guys are studying. Hope you guys are doing good. Second week of January left, or I mean done. 2 more weeks to go. About 9 training days. We're off on Monday. Oh man, I am getting sick. I'm sure you guys are hearing that. I'm trying my best not to sniffle in these videos anymore. I appreciate your guys' support. Hit the follow button. I drop these videos every day at 3 p.m. Have a good weekend, guys. I'll talk to you on Monday. Keep studying. Use your stop loss. Bye.